Now that interest rates have gone up to 6%, which is just about twice what it was at the beginning of the year, will prices finally come down? That's what we're going to cover in this video. Hi, my name's Allesen Cann. I'm a realtor with the Dean Aguilar Group with Big Block Realty here in beautiful San Diego, California. So many people are wondering when the market is finally going to come down. And with interest rates going up as much as they have, and inflation on the rise and a recession coming, that it has to correct, right? I mean, it just seems like it makes perfect sense. Well, that's what I want to dig into in this video. So far in San Diego this year, prices across the county are up 15.2%. If you look just at the city of San Diego, they're up 18.9%. So prices are definitely still going up right now. But there are two primary things that drive prices: supply and demand. So let's look at both of those in detail so we can figure out if prices are finally going to fall. One way to visualize demand for real estate is to look at the showing information for homes that are on the market. How many people are going to see houses? And you can see in this chart that showings skyrocketed during the pandemic and the year and two afterwards. And they're starting to finally just now tick down. So we only have 1 month currently of downward trend, but I fully expect to see May and June tick down as well. But you can see that we are still a long way from getting back down to 2019 levels. Another thing to look at is mortgage applications, and those have dropped by 42%, which just seems insane. But applications are still higher than they were in 2019. So basically demand is still strong, and in 2019 prices weren't dropping. Now let's look at supply. You may have heard that we are getting more homes on the market, and that is absolutely true. But we're also in spring, and we always get more homes on the market in the spring. So if you look at this chart, the question becomes, are we actually getting more homes on the market overall, or is this just a normal spring seasonality bump? And according to this chart, it's a spring seasonality bump. You can see that this spring compared to last spring, we are lower in inventory. So inventory has been going down for years, and right now it's continuing to trend down. Currently, inventory is lower than it was in 2019. Demand is higher than it was in 2019, and in 2019 prices weren't dropping. So if demand is higher than supply, prices are still expected to go up. We can really see this if we look at a months of supply chart. So months of supply means if all of the homes on the market today, if we kept demand the same and just had the homes that are on the market today, it would take 1 month at current levels to sell all the homes on the market. Now that's at current demand levels. So obviously with demand dropping, we will see that number go up. It will take more months to sell the same inventory. According to the National Association of Realtors, 6 months of inventory is about a stable market. And that would mean that we need 6 times as much inventory as we have today to make a stable market. But that's also at today's demand levels. So if demand goes up, maybe we only need 3 times as much inventory. That's still a big increase. So let's see if we think that's going to happen. So in order for inventory to go up, we need more people to sell their homes. And prices are really high, so you would think that they have a lot of incentive to sell their homes. But there's a few things working against that as well. One of the big ones is that prices are high, so people really don't know where to move or, want to pay the higher prices. Especially if they need a bigger house, or maybe they really like their neighborhood, but they just don't want to spend more money, so they're going to stay put. On top of that, most homeowners have refinanced into the crazy low rates that we've had for the past few years. So they are now at 2.5 to 3.5% interest rates, some people even lower than that. They don't want to give that up, so they don't want to sell and then end up with a much higher rate. Another factor that I see in California a lot is that people don't want to sell their houses just in general. So if they're going to go buy a new house, they will often keep the home that they currently have and turn it into a rental property, because we all know what a great investment California real estate is. Add into the mix a looming recession, and most homeowners are going to rather stay with their current fixed mortgage rate than take on a higher payment. Because of all this, I am not expecting to see prices go down. In fact, current predictions are showing prices going up for the next 5 years. You can see here that the price increases for this year is still at around 10%. Maybe it goes a little bit lower if interest rates continue to rise this year, but prices will still keep going up. Over the next few years, they will definitely be increasing at a much lower rate. Does this mean that there might be pockets where prices actually go down? Absolutely. There could be neighborhoods that have gotten overheated and prices may dip a little bit. But how are you going to figure out where those are and how long that's going to last? That's why timing the market is so hard. What I'm seeing right now in today's market is, for sellers, still a great time to sell because prices are still really high. So if you want to get, if you need to move or if you want to get out of a rental property, it's a good time to sell. If you're a buyer, you might be thinking now isn't a great time, but things have totally changed. For the past 2 years, it's been bidding wars and you have to move really fast and you have to spend way over list price and all kinds of craziness. Today, we're seeing homes sit on the market for longer, 2 weekends even. We're seeing homes sell for list price. We're seeing way fewer bidding wars. In fact, the average sales price had been 6% above list price. Now it's back down to only 3% above list price. So you can see there are way fewer bidding wars going on. It's a lot easier to get a house right now. And if you talk to anyone who bought during the past couple of years, they will tell you that that is a huge benefit. And you can probably pay list price and sometimes even lower if the house has been sitting for a while. And so what do you do if you do buy? Now you're stuck with a 6% interest rate. Well, rates are expected to go back down in the next couple of years. So when they do, you can refinance. So you're not stuck with that rate forever. You can absolutely refinance later and get a lower rate. And once you do that, you're actually going to free up a bunch of cash that you can now use for home improvements or to buy your next investment property or to go on that great vacation that you've been wanting to go on. If all of this is a bit much and you're not sure if you should buy now or if you should wait and how you should think about that, check out my latest video. It's actually on that exact topic, and it's should you buy now or should you wait?